What exactly are the ideal conditions for a short iron condor when trading 0DTE SPX? Is it high implied volatility with rich premium? Is it low realized volatility with little to no movement? In this video, I'm going to show you exactly what I look for when I use this trade, when I avoid it, and how it fits into my overall trade approach. Welcome back, guys. I'm starting a new series dedicated to trade concepts to complement my trade recap videos. In this series, I'll break down specific parts of the strategy, one concept at a time. To start, we're looking at one of the neutral trades in the playbook, the short iron condor. A lot of options traders gravitate toward this trade because you don't have to pick a direction. The market can go up a little, down a little, or sideways, and the trade can still work. Though anyone who's traded short iron condors would know that if you use them in the wrong environment, the losses can be ugly. So this trade is not something I put on just because the market looks quiet or premium looks decent. Let's start with the bigger picture. This is a 5-minute chart, and the moving average you see here is the 200 period simple moving average. I use the 200 SMA on the 5-minute chart as a micro trend filter. It helps me decide whether the market is showing a short-term directional trend or whether the trend is flattening out and becoming more range-bound. Now, when using a trend filter, the simple assumption would be price above the moving average means bullish, price below the moving average means bearish. But it's not that simple. Just because price is above a moving average, it doesn't mean we're in a strong uptrend. And just because price is below it, this doesn't mean we're in a downtrend. If the moving average is flat, the market may not be trending at all. While refining my directional trading, I found that when this moving average was flat, directional accuracy started to drop when analyzing past occurrences. So instead of forcing directional trades in those conditions, I started looking at neutral structures. This is where the short iron condor comes in. Since we can't know how the current session's moving average will behave before the day unfolds, I use the previous session to build a plan. I look at the slope of the 200 SMA, the difference from the open to the close of the previous session. If that value is less than 0.20% of the current SPX price, I consider the slope to be flattening out. This tells me before the market even opens that the upcoming session may not be ideal for a directional trade, and I may want a neutral structure instead. Furthermore, I separate the market into typical volatility and high volatility environments. For that, I use the 20 SMA on the daily chart. If SPX is above the daily 20 SMA, I consider that a more typical or lower volatility environment. If SPX is below the 20 SMA, I consider that a higher volatility environment. This is important. For this specific short iron condor setup, I only take it when SPX is above the daily 20 SMA. High volatility may give you richer premium, but richer premium does not automatically mean better short iron condor conditions. In higher realized volatility environments, the market may simply be moving too much. For this setup, I want typical volatility and a flat moving average from the previous session. Now the question is timing. This trade will go on at the midpoint of the regular trading session. Additionally, the first half of the day gives us enough information to judge the conditions before entering the trade. While exploring some additional filters to decide whether we take the short iron condor, skip the trade, or possibly pivot to a different setup, a few things stood out while observing where price was in relation to the first hour range. You might assume that if price is still inside the first hour range at midday, that would automatically be good for a short iron condor. Sometimes it is, but not always. If price is outside the first hour range by midday, the short iron condor can make sense because the market may have already made its meaningful move for the day. If price is still inside the first hour range and has never left it, that can also support the short iron condor because the day has remained contained and balanced. But if price left the first hour range earlier and then came back inside by midday, that is a very different environment. In that case, the market has already shown expansion and rejection, which can create a higher risk of another directional move or continued volatility. That is where skipping the short iron condor or possibly pivoting to a different setup becomes more attractive. The other filter I use is the range from the open to 11:45 Central Standard Time. If that range is greater than 0.70% of the SPX opening price, I avoid the short iron condor. That tells me there may be too much volatility for this setup. So here's the full setup. The previous session's 200 SMA on the 5-minute chart is flat. SPX is above the 20 SMA on the daily chart. The trade goes on at 11:45 Central Standard Time. At that time, I like the short iron condor if prices outside the first hour range and the range from the open to the time of trade execution is not greater than 0.70%. I also like it if prices inside the first hour range and has stayed inside the range all morning. I avoid it if prices inside the range after already leaving the range earlier. And I avoid it if the range from the open to the moment of the trade entry is greater than 0.70%. That's how I decide when the 0DTE SPX short iron condor belongs in the playbook. It's not random, it's not emotional, it's based on volatility environment, trend structure, first hour range behavior, and time of day. And when those conditions are not right for the short iron condor, that does not always mean there is no trade. Usually when you filter trades out of a strategy, those filtered out trades are just lower quality. Maybe they have too many losses, or maybe the wins and losses are too close to even. But in this case, the filtered out occurrences were so heavily weighted toward losses that the opposite trade structure became interesting. This is where the long iron condor comes in. With the long iron condor, we want price to move out of the range and push through one side. So if the short iron condor conditions are not ideal, those same conditions may actually point toward a long iron condor setup instead. So this gives me an adaptive trade method. Before the session even begins, I have a plan. Then as the morning unfolds, I use the data to decide whether the short iron condor is valid, whether I should avoid it, or whether those conditions are pointing towards something else. If you want more videos like this where I break down the thought process behind actual trades, check out my trade recap videos. And if you want real-time trade alerts via Discord or SMS text, check the link in the description below to join the group. If you found this helpful, please like and subscribe, and I'll see you guys in the next video.